Hello everybody, my name is Matthew Ferris. Once again, I'm the founder of Ferris Benefit Group. We are a health, life, and disability insurance firm. And today we're going to talk about I.U.L, which is a continuation of life insurance. And we talked about the importance of life insurance, that you're getting it for people that you love. You should have a life insurance policy outside of your job. And we talked about term and how term is usually the least expensive because you're getting it for a certain amount of time, which offers affordability and still protection for those you love as well. Then we talked about GUL, how a GUL policy, life insurance policy, is a guaranteed universal life. And that has some of the benefits of the term, which is the affordability, but it's still a permanent policy, like something like a whole life policy or I.U.L, which we're going to talk about in this video. But what exactly is I.U.L policy? It stands for Indexed Universal Life. So what's happening is that this policy is great for people who still care about that death benefit, to make sure it's there for the people that they love to take care of in case they unfortunately pass away. But they also are interested in investing as well. And the index, it really works with an index fund from the stock market. So not only are you paying for that death benefit, I think in the previous video we mentioned about the morbidity factor, about how that's pretty much in a simple way how insurance companies figure out what to charge you based upon the chances of you dying. So that's being paid for with the death benefit, or that's how they calculate the death benefit. But also what you're doing, the part of that money, the monthly premium, the monthly payment you're making every single month, part of that money goes to an account that builds cash over time. So with the index fund from the stock market, they're not invested in the fund, but what they're actually doing is looking at the performance of that fund over time, and they're crediting your account based upon the performance of that index fund from the stock market. And why this is good is because you can really just become your own bank over time. Now, this takes time. I've had people come to me that they said, well, I have this money and I want to, buy a house or property with this money over a certain, maybe in the next year. So I always tell people, give it time. You're looking at, somewhere between 5 to 10 years. And of course, everybody's situation is different, but this is kind of like a golden rule. You want to allow your account to have the time to grow. And also there's tax regulations, we'll get into another video, that limits how much you can put into your I.U.L policy at another time. But we're gonna keep it pretty simple in this video, talking about the basis of an I.U.L. But let's just say you get an I.U.L today, you fast forward 10 years or longer. Now you have the ability to take the money that's built up in that account, and you can loan against it to be able to do things like buy a house, maybe start a business, send your kids to college, all this stuff that regularly somebody might have to maybe save years and years to do. You have this account and you can use it for that. So it's great for people that are trying to do that. Another benefit for I.U.L policy is that if you invest directly to the stock market, then you can run the chance of losing all your money if there's an economic downturn or the stock market drops. With the I.U.L policy, one of my favorite benefits is that it has a floor. And what that floor means is that if the economy drops and there's an economic crisis, there's a limit to how much, or there's a floor, a minimum to how much they're actually going to pay you. So that's on all the policies that I've seen and worked with, is that it might be a little as 1 or 2%, but you're not going to get a negative return. You're not going to lose money on your I.U.L policy. It might not grow as fast as you want, but that protection, that floor is there, which is great. So to sum it up, once again, I.U.L policy is great for somebody that cares about the death benefit. They want to have that for protection for their loved ones, but also they have extra money that they're thinking about investing. And this is a great way to do it, where you have that protection. And as time goes on, you can become your own bank. You can do some great things with it and really focus on leaving that legacy for you and your family and the generations to come.